Hallo nochmal aus Mexiko und jetzt sind wir in Monterey und hier besuchen wir auch einen Kreditgeber, auch von Mintos wieder, und zwar GoCredit. GoCredit habe ich euch, glaube ich, auch schon mal kurz vorgestellt in einem meiner Artikel und die sind deswegen ziemlich interessant, weil sie halt eins der Unternehmen sind, die diesen Master Trust Fund haben. Das heißt, hier kann nicht das Gleiche passieren, wie beispielsweise es Vovo gemacht hat, dass sie einfach keine Lust mehr haben zu zahlen und das Geld dann bei uns nicht ankommt, sondern das geht erst auf ein Treuhandkonto. Und quasi die Investoren werden erst bezahlt und dann sozusagen der Kreditgeber. Genau, das Ganze gucken wir uns jetzt mal an. Hier ist das Büro und wir besuchen nachher auch noch eine Filiale und schauen uns mal an, wie die Kredite vergeben werden. Und jetzt habe ich ein paar Verantwortliche organisiert, die uns ein bisschen mehr erzählen über das Geschäft. Ja, und das hier ist so die Umgebung von dem Office. Und ja, Monterey ist eine ganz schicke Stadt, muss ich sagen. Habe das nicht so erwartet. Viele Berge, ziemlich heiß. Aber ja, gucken wir mal. So we are here now with Ramiro from GoCredit. And Ramiro, maybe you can introduce yourself and what are you doing here?
Sure, great. So my name is Ramiro Montelongo. I am the Chief Commercial Officer and Digital Transformation of our company from GoCredit. Today we're going to go around our offices and visit so you can know our offices. And also we're going to be visiting our branches so you can see a little bit of our operations here and the way we do things digitally here in Mexico.
Okay, great. So let's go inside, I would say.
So it would be nice so you could know what exactly does GoCredit do here. What we do is we're a financial here in Mexico institution that we are in the market of personal loans. We have two different products, very important different products. One is a personal loan for retired persons, where we lend them to different important retirement institutions in Mexico, such as IMSS, which is one of the largest retirement programs in Mexico. And we also do it for ISSSTE, which is all the employees that used to work in any kind of institution in the government. They retire through this institution, which is ISSSTE. Also, we have two of the most largest government companies, which is Pemex, which is the oil or the petroleum company in Mexico, and CFE, which is the electricity company in Mexico. So everybody that works in there, after they go through a process, they retire, and they get access to a loan from us. So this is one of our principal or our main products that we work here in GoCredit. Mm-hmm. The other one is the loans for institutions, for government institutions. We make a partnership with them where we loan, we give our loans to the employees of these institutions, and they deduct the loan or the payment directly from their payroll. It's what's called, this is a payroll deduction, and we get the payment directly from the government. So these kind of products are very simple to operate because we actually don't go to collect the money. They do it directly from the institution, from their payroll. So these are our two different kind of loans that we handle here, or that we have here in Mexico in GoCredit. Right?
And what about the loans you sell to Pemex? Is this also deducted directly from the payroll?
No, those are differently. What we do is that we do through our digital system, we go and deduct it directly from the bank account. So one type of loan, we go and get it directly from the bank through a transaction, to a digital transaction, and the other one, it's a dedicated payroll where the company actually deducts it directly from the payroll, and they pay the loan to us, right? So these are the two types of loans that we have.
And both loans are also on Mintos? Both loan types?
No, just one type. Just one type, which is the one that we go actually and deduct it directly.
Okay, so would you say this is the more safer way to?
Both of them are very safe. The risk is very low because we have certain, for example, in the loan where we go and deduct it directly from the payroll, what we do is that we understand through intelligence when is the exact time that they are going to receive their payment. And we go with our systems, we go and get that payment exactly right after they got the payment. We go and get it directly from the account. So we could say it's safe, but some of them,
they cannot decide not to pay, right?
They could decide. There's always going to be this risk, right? But what we search is that through our origination and the analysis that we do for those kind of loans, we obviously minimize or reduce the risk of that happening, right? But sometimes there is going to be people that they're going to get up very early in the morning because they know when they're going to get paid, and they will be write out the cashier so that they could deduct or extract the money, so we don't have money to go and collect. So anyway, those kinds of customers, what we do is that we have in our branches, we have people that go and collect. We have collectors. And they go to their home and hey, what happened? You took your money out. We need the money. Could you help us, gain your payment? And we have very good results on that also. So that's why even though we have all the infrastructure to go and collect the loan, we also have people that are collectors that go directly to the home, knock there and give me the money.
Directly to the home.
Directly to the home. Yes.
Okay. Okay, great. So let's go to the office and let's see what your people are doing. Yeah.
So here we have our HR area, finance area. We have some lawyers over there. We got HR on this side, and finance, which we were right there in the office.
So lawyers on the right side and
yeah.
Okay.
All together. Cesar is our CFO.
Hi, good morning.
Hello.
So Cesar is the one who authorizes almost everything in the company. What we can spend and what we cannot spend, right? So come on, let's go to show you to the other places upstairs.
Borrowers, what they have to pay for the loans. So, what is the rate for the borrowers?
Oh, the rate here is around 99% interest year loan.
Oh,
it's a very, it isn't cheap at all. But well, we also understand that the risk is a little bit more higher, right? But in that ways, we could manage the risk and still give good revenue or great revenue to our investors. That's what we're looking for, right?
Okay, so now here is a little bit louder.
This is our collection team. Most of these persons work talking to customers to letting them know that they have a default. So they basically are most of the time administrating all the risk and all our collections, right? So we have most of them are here. There's something very important here. Our customer is very inelastic to the interest rate, right? What they need is the money to be delivered more rapidly. That's the thing, right? So we call it this way. This is more. We are selling the fast that you could get your loan, right? The easiest and the rapid way you can get your loan.
So the faster you get the loan, the more expensive it is.
It's more expensive, definitely. That's it, right? Because you could get it here in less than 24 hours. You could get your money dispersed in your account, right? Okay. What happens if you have the time? Well, maybe you go to the bank, and because you are already retired, most of the banks reject you automatically. So you don't have a lot of sources out there to actually get a loan from, right? So maybe you could have a credit card, but besides you need money. So getting the money out of the credit card is going to cost you anyway a fee, and your credit card it might be already in the 60 or 70 interest rate. And most of the people already have, they have topped up all the credit in their credit card. So it's going to be different. It's going to be difficult for them to actually get some money. They have problems, maybe medical problems, or they need to have an emergency to attend. So this is where we come in together right there, right? So we put the money where the customer needs it at the moment right there. So that's why we could see these kind of interests, right?
And what is the usual amount the borrowers can take?
It goes from 5,000 pesos, which is around $250, up to 150,000 pesos, which is around $75,000, $7,500, right?
Okay.
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 Now this is our top secret area. Almost no one could come in here because these are, hi Hugo, these are our credit analysts. Here's where all the magic happens, basically, because they are the ones responsible for actually selecting our best customers and to be careful of our risk, you know, be the guardians of our risk politics, right? They assure that every single customer that we actually are looking at has all the qualities that they need to pass our risk politics, right? So we could come and see, so you can see how they all are analyzing each customer. They analyze the credit bureau, they analyze their credit account. You know, they check that their IDs are legal IDs, or they're not, you know, altered IDs. They actually check almost everything from the credit, right? Mm-hmm. If they have any kind of questions regarding the information that was presented to them, at that moment, they call the customer directly just to understand if there's something wrong, or if they see something wrong in their, for example, in their bank statement. See, for example, from here, they could see if a customer actually has this activity that every time that he gets his payment, a couple of hours later, he gets all the money, right? So that we could see that that's something that's going to happen because it is already done by the customer. And then if we see that this customer does that activity as a regular basis, what we see is that if he has another loans with other companies. So if we see that kind of, you know, that kind of style of life living where they get the money out, we just prefer not to loan them at all, right? Because we already know that he knows that he is already have to be paying other loans that he has, sorry, and he just takes the money out. So we could see that there's a correlation right there of someone that maybe won't be able to be paying us, right? So
do you check every customer manually?
Yes, we check almost. Yes, for now we do check every customer manually. Yeah. What we do is that in the beginning of the process, we have to check the credit bureau. We are right now working on AI to actually search for the best parts of and correlations that go through our risk policy, and
automate your business.
We want to automate that, at least that part, right? Because there's always going to be the need of a hybrid, right? Because there's no one that could actually substitute what he already knows and what he already catched of certain things. Not most of the variables that they study for a credit can be actually automated, right? So there's always going to be the need of someone to actually go and look directly if there's something weird that we should, you know, come up that maybe an AI wouldn't be able to recognize, because it's going to be all in terms of just certain variables, and they have to analyze, and most of the variables are yes or no, yes or no, yes or no, right? So you get your big branch there and you say yes, no, does it comply with this? Yes, okay, so you can go on. It complies with this other variable? Yes, we can go on. It complies with this? No, okay, so it doesn't comply, right? So things like that.
Do we have in Mexico a database where you can see that the borrower has loans also from other companies, or where you get this information from?
Well, I'm not sure if there's. See, the thing is that we are a SOFOM, right? And this is very important to understand. SOFOM means Sociedad Financiera de Objeto Múltiple. These financial institutions actually don't report directly to the banking authorities, right? So this gives us a little bit of more flexibility, right, in operating. Not outside the law, but we don't have to comply with all the banking laws, which are very, very complicated in Mexico. Mm-hmm. So the thing, and that gives us an advantage, but also it gives us certain disadvantages, because we are not obliged to comply with information from our from our risk customers, our sales and things like that. So if we're going to go out there and see a benchmark, it's going to be very difficult because most of us are going to say, we have these SOFOM society where we share best practices and things like that. But since most of us are in the same market, we obviously don't share our best secrets, right? So it's just, and if everyone is going to say, no, I'm great. I have a great risk level. I am the best in the market. And when you're going to go and have that benchmark, it's going to be quite difficult, right? Because you actually won't know if the information is true. So I hope I answered your question there. So let me introduce you to the sales team. Chicas, buenos días.
Hola.
Digan hi, say hi. On this side we have the marketing team and our branch and product deputy director, which is Eva. Eva is the, let's say she's like the asset of the company because she's the #1 employee. So she was like the first person that came to the company. She's part of the company already. She knows a lot of our product, of our customers, and she's been developing most of the products that we have today, and help us get the right product to our right customer, right? So this is Eva over back there. Well, that's Cynthia. She's right there in a meeting. She's a marketing girl. She helps us with everything you see that has to do with the branding. Right?
And she's super busy.
Yeah, she's very busy.
Yeah.
Cynthia, ¿puedes decir hola nada más así?
No, it's fine.
¿Puedes decir salud así?
Hola.
Right?
Okay, great.
And then we have Jamile. Jamile is she's in the team of Omar. She's our risk manager also. And sometimes our enemies and sometimes not. But no, she handles most of the information of the risk analysis. She's a risk analyst of the company. So we could actually understand if we are doing well in our risk policies and if we're doing well in our sales, right? Mm-hmm. Right? So, gracias.
The sales team like it more warm because it's the most warm room, I think.
Yeah. Well, it's because they don't like to cool it. I don't know why. We have 3 air conditionings right in the 3 places, so I don't know why they don't turn them on. So this is GoCredit. Here is the common area where everybody comes out and mingle a little bit depending on the hour of the day. They actually have lunch in these kind of benches. We have our kitchen over there where they have different microwaves and a couple of refrigerators, things like that. This is the CEO office. He's definitely not here today. He's got a couple of meetings outside, and our board meeting offices, which are our room or meeting room. It's over there. Mm-hmm. And basically, this is our place. This is GoCredit.
Nice. Okay, great. Thanks for the tour. And now let's go to the branch, right? Yeah. Let's see what you're doing there. We are here now in front of a GoCredit branch.
GoCredit, yeah.
Right? So what we are doing here?
Well, this is one of our branches in the city. So I wanted you to come here so you could learn how we actually, are more close to our customers. Around in this plaza or little shopping mall. We have other competitors, brands here also. So this is a place like for reunion for most of our customers, and we have to look, very, very attractive to our customers and tell them what we actually do here.
Okay, let's go inside.
So let's go inside. These kind of branches are very small branches because most of our processes are completely digital, right? So since our processes are digital, we don't get too many customers here to visit here or to actually make a sign or any kind of tramit for their credit loan, right? So this is why our offices are small. They are more like a representation place where for branding, basically, so that customers could actually know where we're at. So, but let's come in.
And this is also here your target group, right?
Yes, he is. For example, he is our target. Definitely, this guy is our target. Since we go directly to people who already are in they're retired and they're living from their pensions. So our loans are basically based on their pensions.
Yeah, and these are also the companies are mentioned here. You are working together with, right?
Yes.
So you're targeting the retirement.
Eastay is a part of the retirement from ex-employees of the government.
Okay.
EAMS are ex-employees of all Mexican, any kind of company. You retire through the EAMS. And Pemex is the largest oil company in Mexico, and it's a government oil industry. And there's a lot of people that retire from Pemex, right? It's okay. Let's go. This is Sergio. He's our branch manager. Sergio, ¿cómo estás? Bienvenidos. Aquí estamos. And as you can see, the reception is a very small office since, as I told you before, we don't receive that much customers. Why? Because most of our processes are completely digital. Today, we don't have any kind of signing, papers. Everything is delivered through a web app that we developed in-house. And this helps us to gain our customers more rapidly. We have a better service. And if a customer, since you saw our main type of customer are people that are already retired. So what we do is we go visit them to their home so that they don't need to go out. And we take our phones there and they can sign through the phone using all the validations with their fingerprints in the phone, and also using the biometrics of their face in terms of trying to minimize any kind of theft of, how do you call it? Identity stealing, right? So we guarantee that the customer is who he is or who he says he is, right? Because of the biometrics.
Yeah.
And this process helps us to give a better service to our customers. So this is why we actually don't need big offices. We don't invest in big offices. We try to invest most of the money lending the money, which is the money where we get from a lot of more revenue from it, right?
Yeah.
We make our money work. That's what we do, right?
So maybe it's important to mention that you are in a growth phase right now.
Yes, right now we're in a growth phase, and we are actually trying to seek to be present in more places in Mexico, trying to put some of these offices in other states. Today we have a presence, as I said before, in 70 states. There in Mexico there are 32 states, so we're basically on half of the country. But there's another half of the country where we could actually develop and gain more customers. So we are right now in this phase where we want to grow up, and that's why we're also looking the investment that we have from Mintos today right now is around 21% of all our funding, and we want to take it in a growth up to 100%. This would mean taking the Mintos fund up to 40% of our funding. So we're very happy with what we're doing with Mintos, and I think that we can still keep growing our relationship today, as of today, and helping us in terms of being present where we have more customers is going to deliver definitely better revenue for everyone and for all investors, right? So this is it.
Great. Okay.
Thank you very much.
Thanks. So we want to film that as well?
Let's go. Come on. Let's go. As you can see, we have very small places and offices. These are small working stations. Since everything is digital, I say we minimize the use of paper, and we don't need that much space, right? So this is where we work. Over here is Guillermo. Guillermo is one of our coordinators. Hi, Guillermo. ¿Cómo estás? ¿Todo bien? Sí. Guillermo works in an area of the city where he can get a lot of new customers, which is very close from here. And he works in the part of Pemex, where there is an oil refinery. And since we work for Pemex retirement, and also we pay for active employees of Pemex there, we have a lot of a market there, and that's where Guillermo comes in, right? And
he's going to the future customers, and this is
yes, he's going up to the future customers. And as I told you later today, in a couple of days we are launching new products, and these new products are to fulfill the loan needs for more customers in Pemex, because Pemex is a very large company. He's got thousands and thousands of employees, and definitely credit needs, right? So we are trying to deliver these kind of products, which are products where a customer could actually get the money in less than 24 hours. And this gives us a very competitive advantage, even though we have a larger interest rate comparing it to a bank. What we actually do is that we deliver in service the money at the right moment for the customer, and that's what the customer values. That's why he's okay in paying, you know, more expensive interest rates besides the banking, because the bank is going to ask them much more questions. The bank is going to actually see if they had a very perfect credit history during their time they were working. Remember, we are talking about retired persons, so they used to have, you know, some income, and when they retire, most of the time their income isn't going to be the same one that they had when they were working. So that in that transition, a lot of customers lose score points from the bureau. So that makes them, you know, go and search other different financing tools, right? And that's where we come in, right?
Okay, nice.
Perfect.
Okay, great. Thank you.
That's my well.
So what I learned from today is that the loans are secure due to the companies you use, like Pemex, this government owned, and also it's directly deducted sometimes from the
payment roll.
From the payroll, yes. And there's another feature, it's called a master trust fund, which is very, I would say, not unique on Mintos, but just a few loan originators have this feature. Can you explain what is happening there? Yeah, well, basically is that the trust fund is in the middle of the whole fluctuation of the company and the whole money earnings in the company. For example, all the money goes directly to the trust fund. After we collect the money, everything that we collect goes directly back to the trust fund. And this trust fund has the order to first pay all our investors directly, immediately, and whatever is left out of what we collected will go back to the company. So basically, we are guaranteeing that every time we collect, first come our investors, and then comes the company and all the, you know, all the things that we do. So we have to be very, very aggressive with the collections, and this means that we have to keep our risk very low. This is why we've been being able to keep on growing, because it is different when you collect at the right time. This complicates all your incomes and your cash flow. So with this trust fund in the middle helps to actually guarantee all our investors that they will get their money first, right? After we got the collections, it goes, sorry about that, directly to the trust fund, right? Yeah, I told it already to Caesar. There was a case on Mintos where the loan originator just decided not to pay anymore. This cannot happen in your case,
yes,
right?
It doesn't happen in this case because all the income is distributed equally directly to the investors, right? So maybe a couple of persons won't pay because they just couldn't pay, you know, or they don't want to pay, because that's also called willingness to pay. They don't have any kind of willingness to pay, and the investor won't suffer of that because we will pay from the other collectors that we're giving. So all the collection goes directly to the trust fund, and then it goes directly to our
This is the buyback guarantee you're talking about. Yeah?
Yes, this is like a guarantee right there. Right?
Yeah, okay. Talking about this collection and default, what happens when the guy who is working for the company is changing the company and you don't have the access to the payroll anymore? Well,
remember we have two kinds of loans. One of them goes directly from the payroll, and when that happens, the company actually tells us where this guy is moving, and we have intelligence that they give us even the same bank account that they are using, right? Okay. Because they are obliged to do it. But since we have on those kinds of loans, in the other ones where we go and collect the money directly throughout the digital platforms and the banking system, what we do is that we are constantly tracking our customers where are they going to, right? And we have certain intelligence connections that can tell us if he wanted to change the bank. We could actually go and find out to which bank he's going. We don't know the account, but we would know at least for which bank he's going. Then we could start making all the gestures right there to get back the customer.
But is this then technically a default for you if the...
Yes, right there it will become a default. So what we do there right there is where our customers get a visit from our land collectors, our home collectors, and they go visit the customer, and what we need from the customer is that they give us their new accounts where we could go and collect again directly to the account. Right? So that's what basically happens.
Okay. Maybe one last question. Do you know your actual default rate from the company?
Exactly at this time, I don't know it because there are different, they will be different for each product.
Yeah.
So that question we could ask directly to Omar, and Omar will tell you the exact number of the default rate. Okay. But as numbers, I could remember it's around 11 to 13% of the whole portfolio. Okay, so it's very reasonable. No, it's very reasonable. It's very reasonable because of the interest rate. Remember, our interest rate is 99 to 100% interest rate. So having a 12, 13 default, definitely it becomes a very sustainable, default. Yeah. But I guess Omar could give you more information about those kind of rates, right?
If you get so much interest, maybe you can get the investors a little bit more.
Yeah, definitely.
So we just earn 10?
Yeah.
11%?
11%, yeah. So
11%. 12% would be nice.
Yeah, definitely. No, definitely. And that helps a lot. The thing is that the interest rate that we have, it gives you a very good gap to have good operations. And as you can see, we don't invest that much in our offices. They're just small, simple offices, and you could see in our corporate, we're the same. We don't need fancy offices and things like that. We use the money basically to put it to work. So we prefer that money, use it to be working outside in the streets with our customers than rather buying a nicest chair and things like that. We don't need that, right? Okay.
Okay. Great. Thank you.
Awesome.